So we are doing this sum of October, November 22, paper 33. And this is a sum of merger. Can you please read the question for me, Ashita?
Yeah. Alan and Doreen were two sole traders. Alan ran a manufacturing business and Doreen was a retailer. They decided to merge their business, and from a partnership on 1st July 2022, the financial statements for the year ended
Stop!
30th June
Stop!
2022 were as follows.
Alan and Doreen is sole trader, right?
Yeah.
Okay. So two sole traders are merging up to form a partnership.
Hmm.
So it is like what?
Sole trader plus sole trader.
Sole trader plus sole trader is equal to partnerships. Okay. So this
Yeah.
is like a partnership firm. I have been given the income statement and statement of financial position. So when I do this sole trader plus sole trader, what is the first step that I have to look ahead for?
First, you have to find out the NATO.
What is NATO?
Net assets taken over.
Okay, the net assets taken over. Then will you do goodwill adjustment or no?
Which adjustment? I can't hear you.
Then will you do goodwill adjustment or no?
Not in the NATO.
Not in the NATO. Okay, very well. So now you've been given the income statement and you are given the statement of financial position. Are you with me?
Yeah.
Okay, fine. You have the further information that is available. What is the further information that is available?
The partnership would continue to supply all of Aline and or to supply to all of Aline and Doreen's customers. They did not expect a change in the volume of sales.
What does this mean?
That the sales will be the same.
Sales will be the same and
That's it, no?
the sales is going to be the same. They will supply to the same customers. That means your new revenue will be how much?
New revenue. They did not.
It is
Adding both of these 76,900 plus 112,000.
okay. So when I am doing the question, I will read what are they expecting out of me? What is the A part that they are expecting from me?
Suggests two reasons why the merger made possible the savings in administration expenses.
Okay. So two reasons why merger has led to saving of administrative expenses. Can you tell me?
Hmm. They
What is
don't have to pay separate
administrative
administrative
expenses?
expenses. They only have to pay one,
What is administrative expenses?
like office costs.
Office costs. So how can merger reduce the office costs?
कम पे करना पड़ेगा ना अब.
How? So what reasons will
Because first
I?
they were to pay separate. First they were to paying separate. Now they only have to pay one
What one? Now you have to give
cost.
now, but which cost?
Office cost. Okay, maintenance cost. I can write like this.
Yeah, so they will save in what? They will
Maintenance cost
save
and
in
save in
office
stationery.
cost. They would have less staff requirement.
Huh.
Yeah. First, we
Yeah.
would need two receptionists. Now I can have one receptionist.
Hmm.
First, they might have two offices. Now I will have how many office?
One.
One office. So two reasons why merger made possible the savings in administrative expenses. Can you tell me?
So first is that they'd save in cost, they'd save in office cost, and second is that first they could have two, like they have double the cost, now they only have one.
Okay. So that you can write, right? You will lead to
Hmm.
saving in office costs. Staff requirements can be reduced. You can use any 2 points.
Yeah.
Okay. Next, what are they asking you to prepare?
Uh, can you go eat? What is the second question? I can't see it. Prepare the forecast for forecast income.
What is the next thing that they want from you?
Prepare the forecast income statement for the partnership for the year ending 30th June 2023.
So I want to prepare an income statement. So the now next thing that I will keep in mind is what?
The
This.
income statement,
So
revenue.
I will absorb information only related to what?
What comes in the income statement?
What comes in the income statement. Now keep that in mind, okay? There is
Hmm.
revenue, there is opening
Yeah.
cost of sales,
Hmm.
gross profit, administrative expenses, profit from operation, minus finance cost, profit for the year. Are you with me?
Yeah.
Okay. Now I have to prepare the income statement. Come on, read the first adjustment.
That the sales will remain the same. The first adjustment is that, right? So the sales will be the same.
So what will the sales be?
1 minute. 188,900.
How? So that means when I'm using the revenue, my revenue will be what?
188,900. 76,900 plus
Yeah, give me
1,229.
steps.
1,000.
76 900 plus 112,000, it would be 189, 188 900.
Yeah.
So revenue. Come on, read the next part.
Next adjustment I'll read.
Hmm.
The partners would share profit. Okay, this is not gonna come.
Well, it's not going to come. The profit sharing does not come in the
But it
income
won't come
statement.
right now. Now it'll come later. Miss,
But I
I'm
would
saying
need to know
ethically.
now.
Yeah, sorry. The partners would share the profit of the partnership in the ratio Alan 2 and Doreen to 3. So
Okay, fine.
Alan का 2.5 करना है and Doreen का 3.5 into the profit whatever we get.
Okay, fine. Then,
Then what is the third adjustment? For the purposes of the merger, the non-current assets for Aline's business were valued at 122,000 and for Doreen's business at 192,000. Other assets and liabilities were taken over and recorded at their existing values.
this is for what?
For non-current assets, this will come in balance sheet.
The non-current assets taken over is for what basically?
Yeah. Capital.
Huh? Yeah, NATO.
Non-current assets. No, yeah, take capital.
Non-current assets taken over is for capital. Okay, without
Yeah.
goodwill adjustment.
Yeah.
Okay, fine. So this will give us our NATO. How do you get NATO?
NATO के लिए you do non-current assets.
Non-current assets at which value?
Revised value.
What is the revised value?
122,000 and 192,000.
So for Alan and Doreen, 122,000 and 192,000. Then non-current assets.
Yeah, this
Are there
only.
any other assets?
No. The current assets will also come.
Yeah. What is the current
Current
asset?
assets will come 9,800 and 22 120.
9,820 to 120. What is current liabilities?
Current liabilities 11. Is there any adjustment for that first? Should I see that?
See that?
No.
Other assets and liabilities were to be taken over and recorded at their existing book value. So what is the liabilities?
Huh. So liability was 11,200 and 18,890.
Total total how much?
I'm not done.
11,200 plus 8,000. So this will make it 19,200. Yeah.
Yeah.
And this liabilities total is 18,890. 22,120 minus 18,890. So this is
Hmm.
3,230. No, so give me NATO. NATO for Alan.
Not
122
of
plus 9,800 minus 19,200. NATO for Alan would be 112,600.
126. No.
NATO for Doreen,
I'm doing that. Wait, you are doing wait. 195,230.
hmm. So this is the net assets taken over.
Hmm.
Then this is with goodwill adjustment or without goodwill adjustment.
Without.
Okay. So this would be the capital account balances.
Hmm.
Okay. So this is without goodwill adjustment. Okay, fine. Go ahead.
I have
Read,
to make the income statement.
read the next part. Read the next part. So this is NATO without goodwill adjustment. Read the next part of it.
So then goodwill of the business was valued at 30,000 for Alan and 50,000 for Doreen. It was not to be retained in the books of account.
So that means goodwill is 30,000 and 30,000 for Alan and 50,000 for Doreen. But it
Yeah.
was not to be written in the books of accounts. What does this mean?
So you have to write it off.
So you have to first raise the goodwill.
Yeah, and then write it off.
Okay, so first I have to raise the goodwill and then write off. Okay, fine. We'll do this first. Now we have to make the income statement. So we will stick to the income statement. Are you with me?
Yeah.
Okay, fine. Read ahead. Then read ahead.
Okay. Doreen's bank account contained enough funds to pay off Alan's loan immediately.
Okay. So Doreen had some money from which she could pay off Alan's loan immediately. What is Alan's loan?
1 second.
8,000.
Hmm.
Okay, fine. Let's read ahead.
Estimated cost savings from the merger were as follows.
Hmm.
Alan's administrative expenses 20%, Doreen's administrative expenses 10%, Alan's distribution cost 15%.
So this is the cost of savings. So I'll go
Yeah.
to Alan. Alan administrative expense 20%. That means Alan's administrative expense would be only 80%.
Huh.
Doreen's administrative expense, you are saving 10%. That means your administrative expense is only going to be 90%.
Hmm.
Okay. Alan's distribution costs would be 15%. That means the actual distribution expenses would be how much? 85.
Uh, yeah.
Actual distribution expenses would be 85%. Are you with me?
Yeah.
Read the next part.
Next part. Finance costs other than loan interest are expected to be unchanged.
So, what is the finance cost for Alan and Doreen?
It's 1,510.
Finance cost for Alan is 1510 and for Doreen is
Yeah, and Dori is 0, so total is 1,510.
but loan interest other than loan interest. What are you going to do for this?
Hmm, nothing, na?
Read.
Doreen's bank account contained enough funds to pay off Alan's loan immediately. So then zero कर देंगे क्योंकि उसने पैसे दे दिए.
English.
So
Doreen.
then we'll do it zero because the money is already paid.
So Doreen is going to repay Alan's loan. And then they are telling us that the finance cost other than the loan interest would remain unchanged.
Hmm.
That means Doreen is going to repay Alan's loan. So
Yeah.
Alan's finance cost is going to remain unchanged, but the interest element would go away.
Hmm.
If interest element would go away, how much is the interest element?
Interest element is 8%.
Of
8,000.
what is 8% of 8,000?
The interest, na?
How much?
800.
8% of 8,000 is 800. I need to really change your calculator or buy you a new calculator.
Wait, I did 10% in my mind. It's 640. Sorry.
So the finance cost would remain the same and 810 would reduce. Yeah,
Okay. Hmm.
read ahead.
Production costs and purchases are expected to be unchanged.
That means
That production costs and purchases, that means cost of sales में production costs and purchases will be the same.
the cost of sales would remain the same.
Hmm.
Okay. What is the cost of sales for Alan?
Cost of sales for Alan was 33,040.
And what is the cost of sales for Brian?
Brian कोई नहीं है, it's Doreen.
Yeah.
56,860.
Hmm? So what is the
56,
total
8.
cost of sales?
I have to add both of these, which I'm doing. 1 second. $89,900.
89,900. So they said that the cost of sales would remain what? Unchanged.
Yeah. No, cost of sales, no. Cost of sales cannot remain unchanged because last का inventory will change it.
कहाँ
Hmm.
कहाँ लिखा हुआ है last का inventory is going to change?
It was estimated that the value of inventory of finished goods at June 30th would be 13,290. तो
The
करना होगा ना
closing
इसको.
inventory has to change.
Yeah, that's what.
Okay, fine. 89. What is the cost of sales that we are getting?
89,900.
And what is the value of the closing inventory over here?
Where is that written? Is that I don't. Yeah, yeah. Value of inventory, closing inventory is 6190 is for Alan and 7290 is for Doreen.
And the closing inventory is valued at which date?
30th June 2022.
And this is the inventory for which date?
This is the inventory for that only.
Okay. So just add
Hmm.
6190 plus 7290. What is the value of closing
Yeah.
inventory that we're getting?
1 minute. What to add? I can't hear you.
Okay, no problem. 13,290 is the closing inventory, right?
Yeah, that I got.
Okay, so the production costs and the purchases will remain unchanged. Can we make the income
Hmm.
statement?
I have to make the income statement to find out, na, but
What?
the no, proper.
Yeah, they want you to make an income statement.
Okay, I'm
They want
making.
you to make a forecast income statement. That is what they want from you, and they are asking. They've given us few adjustments that we have highlighted, and now using this thing, we have to make what?
The income
Income
statement.
statement. So make it. So
Yeah.
I